process costing and analysis. Okay. So the first one says here, process manufacturing usually reflects a manufacturer that produces large quantities of identical products. That's going to be true. That is what process costing is about. They produce many of the same products. Like bottled water or maybe Gatorades, they're all the same. Now, job order, remember, that was for specific jobs. Okay, now next one here. Number 2 says direct costs and process cost accounting includes only those costs that can be nearly identified with individual product units. Well, that's going to be, of course, false. That's the exact opposite we just talked about here. You have to estimate the cost for each unit. It's not going to be per unit cost like in job order costing because you're producing many of the same products. Okay, continuing on now, number 3. It says measure the productivity of a process with respect to use of direct materials, labor overhead, and expression of activity of a process, the number of units that would have been processed during a period if all of it had been applied or started and finished during the period's call. Well, remember, when we do that, what we're looking for and we're going to be calculating is EUP, or that's going to be answer D, equivalent units of production. Continue on now, number 4. So which of the following is not one of the forces of account production activity and assigning costs during period under process cost system? Okay, well, again, we know we're going to determine the physical flow of units. We just said we're going to compute the equivalent production, and you want the cost per equivalent unit, and we're going to assign costs. Now, the one thing we're not going to be doing is, what we did in previous chapters was determine over or under applied overhead. Continue on now, number 5. It says, in a process operation, direct labor of production department includes. Well, we know we can include all labor by that department, except only the labor is applied to the product itself. So we know it's not going to be. Okay, all labor of the department include labor services. Count more than one department. I'll include that. Okay, only labor more than one production department. Clerical. Include that too. And of course, what's even practical payroll. The one we're not going to include is all labor used exclusively by the department. If the labor is not applied to the product itself. Next one now. Number 6 says, follows an account of the production department showing its cost for 1 month. Okay, we got the balance goods in process, materials, labor overhead. Assume the materials are added at the beginning of the production process, and direct labor and overhead are applied uniformly. The process costs were $4,590. The starting completing units cost $41,050. What was the cost of completing the units at the beginning of goods in process inventory? Well, first and foremost, you want to add up the costs. So let's start with the $5,400. Then you want to add the $21,600. You also want to add the $16,200. The last thing you want to add is the overhead, which is $10,800. Okay, and again, when you add all these up, that'll be $54,000. Then you want to add up how much is transferred out. Well, now we have the $54,000. So take the $54,000 and subtract. If you use the ending goods in process inventory, which was $4,590. That'll be $49,410. Okay, next part, what's the beginning goods in process transferred out? Well, again, keep coming down now. Take the $49,410 and subtract the completed units cost, which was $41,850, which would be $7,560. And the last part, the cost to complete beginning goods in process. So again, we'll take that $7,560. Okay, and subtract what we did earlier, the beginning balance, which was $5,400. Okay, so the final total will be $2,160, which is answer B. Okay, let's go now to number 7. Okay, number 7 says companies use a process cost system. Assembly departments begin inventory consists of 50,000 units. Therefore, it's complete with respect to direct labor and overhead. Department start and finish 127,500 units. And the inventory consists of 40,000 units that are 1/4 complete. For direct labor and overhead, all direct materials are added beginning the process. The department incurred direct labor costs of 24,000, overhead costs of 32,000. Assuming the weighted average method, direct labor cost per equivalent unit. Okay, now understand. Well, again, first thing we're going to calculate is how much is completed and transferred out. Okay, remember, that's given to us. That's 127,500. Then you want to calculate the ending goods in process. Okay, now you take the 40,000. And what you want to do is multiply by 1/4. The reason why it's 1/4 because it says here, now 3/4 is complete, so 1/4 is not complete. It then goes in process. So it's in process. So that'll be 10,000 you want to add to it. And this will give you my total equivalent units of production. Okay. Again, when you add them up here, that'll be 137,500. And the last part, take your cost, divide by your equivalent units of production. Okay. So we're going to take the 24,000 and divide by the 137,500. And when we do that, that'll be 17 cents per equivalent production. So that'll be letter C. Continue on now. Let's see number 8. At the beginning of the recent period, there were 900 units of product in a department, 1/3 complete. These units were finished and an additional 5,000 units were started and completed during the period. 800 units were still in process in the period, 1/4 completed, using the weighted average method. Equivalent units produced by the department were, okay, let's take a look here. So again here, let's start, we're going to add up the completed and transferred out. Okay. That'll be the 5,000 units, plus you want to add the 900. Okay, so we see all together, that'll be 5,900 units. And then you want to calculate your ending goods in process. Okay, that was the 800 units. And multiply by how much were completed, which is 1/4. So multiply by 1 divided by 4. Again, we're going to add here, then we multiply that, that'll be 200. Okay, so my total, and when we add these up, that'll be 6,100 units. The answer is C. What is now? Medina Corporation used a weighted average method for inventory costs and had the following information available for the year. Production for the year was beginning inventory goods in process, ending goods in process, and total units. Again here, calculate here, production. So again, here to calculate that, let's start with my beginning goods in process, which was 200 units. Then how many were started? We want to add 3,200. Then you want to subtract ending goods in process. Subtract 400. Okay, so this will calculate how many units were transferred. When we do that, that'll be 3,000 units were transferred. Then what you want to do is add the ending goods in process. Okay, remember, out of that 400, we only want 80% of them, multiplied by 80%. So that's 320 units. Again, the last part, to get my total equivalent units of production, you take the 3,000 plus 320, so we know that's 3,320 units. So that's going to be answer B. The next one now. Number 10 here says the following data available for companies doing manufacturing activities: beginning goods in process, units start completed, ending goods in process inventory. The materials are added when the production begins. Direct labor is applied uniformly. What are the equivalent units for direct materials and direct labor? using FIFO. FIFO is first in, first out, process costed. Okay, well, again, we're going to have two categories here. Okay, first one will be my beginning goods in process. Okay, we have one column here for direct materials. And the other one for direct labor. So it's our beginning goods in process. Well, we know for direct materials, that's going to be nothing. We have 0 there. For direct labor, we have to take the 5,000. We're going to multiply by, it says here 1/4, multiply by 1 divided by 4. So that'll equal 1,250. Okay, next one will be how many were started plus completed. And for direct materials, that'll be 15,000. For direct labor, again, take the 15,000. So they were all completed, so that's 15,000 again. So take 15,000 over here. And the last part is my ending goods in process. Okay, right, for direct materials, that's going to be 6,000. You want to add all of them. Okay, for direct labor, I'm going to take 6,000 times 1 divided by 2. Take half of them. Remember, half of 6,000 is, no, 3,000. Okay, the last part, calculate our totals. What we see here for direct materials, 15,000 plus 6,000, we see is 21,000. And for direct labor, take the 1,250 plus 15,000 plus 3,000 is 19,250. That's going to be answer C. Continue on now. Okay, number 11 says here, time to do some journal entries. Back to debits and credits. Okay, got the first one. First one says here, you incurred $105,000 of factory labor costs, which is paid in cash. Well, again here, and so we're going to debit factory payroll for $105,100. And then you want to credit cash because since you're paying cash out, cash is being decreasing. Cash decreases with a credit, so that'd be $105,100. Now B says use $93,000 of direct labor in the production department, right? Because they use this as goods in process inventory. Okay, it'd be $93,900. Again, it's being incurred. And anytime it's incurred, you want to increase your goods in process inventory, so you debit that because it's an asset. Assets increase with debits. And where to come out of? Well, we're using up factory payroll. That's being decreased, so you want to credit that. Okay, so the same amount, $93,900. Okay, last one, C. Use indirect labor. Indirect labor is going to increase factory overhead, so we're going to debit factory overhead for $11,200. And again here, what does come out of? We're going to decrease factory payroll. We're going to credit factory payroll for $11,200. Right. And the last one, A. We're creating a journal entry. So it says incurred overhead costs, $79,000, and you paid cash. Well, again, since they're being incurred, you want to debit increase factory overhead by $79,000. And because you paid cash, well, you want to decrease cash. And of course, cash is an asset, decreases with a credit. So we're going to credit cash for $79,000. Now, so applied overhead at 110% direct labor cost, which is $93,900. So we take $93,900 multiplied by 1.1. So we're going to debit goods in process inventory. Okay, and again, take the $93,900 times 1.1. That'll be $103,290. And when credit, what comes out of? Factory overhead. Same amount, $103,290. That says transferred completed products at cost of $250,200 to finished goods inventory. So again here, They're actually going to finished goods, so we're going to increase finished goods. So we're going to debit finished goods inventory by the full amount, which is 258,200. Okay, and where did it come out of? Well, it came out of goods in process inventory. That's going to be decreased by the same amount, 258,200. Last one, sold 602,000. Product on credit cost is 271,000. Remember, anytime something on credit, you want to increase accounts receivable, the asset, by the amount you sold it for, which is 602,000. Remember, here you made a sale, so you want to credit, increase the sales revenue by 602,000. Remember, anytime you sell an item or product, you always make two entries. One for the sale, and the last one is going to be for the cost. So we're going to debit cost of goods sold, which is the expense. It's 271,000. And then again, where it come out of? Oh, finished goods inventory. Credit that for 271,000 because you don't have any more. It's being decreased. Okay. All right, class. Hope everyone's doing well. Remember, if you have any questions, please let me know. All right, buddy.